begin to think like them, analyze like them.
That's the goal. It gives you a significant edge because you're aligning your analysis with where the real market moving interest lies.
Okay, this is powerful stuff, but let's add another layer. How does this interact with, say, basic market structure? Because price doesn't move randomly, right? It trends, it ranges.
Now you're talking about the power couple, as you called it earlier. Market structure plus volume profile. This is where it gets really potent.
So structure tells you the direction, volume tells you the significance of the levels.
Perfectly said. Market structure is the absolute foundation. Are we making lower highs and lower lows, downtrend? Or are we bouncing between highs? That's a ranging market. You have to know this first. Are we trending or ranging? That question dictates how you interpret everything else, including the volume profile.
Right, context is key.
Always. And the magic happens when you overlay the FRVP onto that structure. Let's say the market is in an uptrend, pulls back, and forms a higher low. Now, if that higher low lines up perfectly with the exactly. You've got structural support meeting volume-based support. That's a high probability long setup. Or flip it. Downtrend, price rallies to make a lower high, but it stalls right. It fails to break above it.
Suggests the sellers are still strong at that key.
Precisely. Structure provides the context, volume provides the conviction at specific price points.
That's fascinating. And does the profile itself look different in, say, a strong trend versus...
Absolutely. In a health trend, you'll often see VH and VAL will sort of trail price upwards. Area finding bids near the VAL.
And in a range.
In a ranging market, the profile often looks more symmetrical, bell-shaped. The pivot. You'll see strategies like buying near the VAL and selling near the VAH, anticipating the rotation back towards the POC can work really well.
Okay, using both volume, point a strong support.
Right, so in a look towards the value or the current price, you watch the price at level. Are you seeing rejection? Pin bars, a bullish engulfing candle. That's your confirmation that buyers are stepping in at that structure volume confluence.
Yeah, resistance zones. Same logic, just flipped.
Exactly. In a downtrend, you'd look for rallies towards the value area high, VAH, or an HVN above price. Then you watch for signs of sellers defending that zone, bearish engulfing, double tops, pin bar territory. This consolidates, often within a value area, and that's often
resistance
candle slicing the LVN. Ideally, aided by an increase in tick volume behind. Forget those specific pattern VAH reversal single candle at the POC, building pressure before a break. Even a doji and adjusts indecision right before price likely rips the valuation.
Through a quick hypothetical, say GBP/USD is trending up on one. You draw your FRP and you know the VAL. As it hits the VAL, maybe slightly penetrates it. You see big bullish engulfing candle form, picks up.
That's a classic. You've got a high with stepped in with force, the engulfing candle, confirming the structure of your potential targets. You look towards the POC of that range, or maybe the VAH, as lodge places, not a pattern.
Brilliant. Okay, but people want to know, how do I actually get them? Is it complex?
Not at all, actually, especially on print.
Walk us through it. Let's open your RSD.
On the left-hand toolbar, find your trend lines and drawing tools. Click that icon. It often looks like a ruler or has geometric shapes. Scroll and you'll see a label profile. Just click.
Got it. Tool select.
There to measure the volume. Click once on the chart for the analysis to start, typically a clear swing low at the beginning of a consolidation. Just drag your mouse across to where you want to get.
Bam.
And bam. The volume profile histogram should appear vertically. You might click on the profile settings. You can adjust how granular the profile looks, change colors if you like. But the absolute most important setting, in my opinion, is usually similar.
So important.
X, VH, and VAL. Right. So as new price action has historical levels,
Okay, that would be used in reading the output visually.
Pretty intuitive once you know the terms. The longest horizontal bar highlighted, the share around it is the value area between VAL, and the sections are your ends.
Now, about choosing where to draw the anchorings. You mentioned swing low solid practices.
Key is to anchor it or move price range. Swing move, a significant or week. What you're an insignificant wiggle on the chart. The data won't be meaningful. Context is everything. Choose space activity.
Makes sense. Garbage out.
And here's a time saver. Once you get the settings look like the color lines extended, save it as a template view.
Good tip, so you can apply it instantly later.
Exactly. Keeps your analysis consistent across different charts and time frames.
Are there common pitfalls people hit when setting this up? Mistakes?
Anchoring it to too small or irrelevant a range that gives you a signal. Forgetting the POCHA runs points. And sometimes people chart with overlapping profiles everywhere. That just creates very few profiles. Oh, that might profile over, say, the entire last week to understand the macro structure and key weekly levels. Then within that, you might draw another small view over just the last 24 hours or up to weekly PO with the weekly VH or your weekly VH. These confluent incredible because
that's concept. One last practical.
The price crosses this level. VH and lines, V profiles.
So you don't have to search.
The platform notify you when price reaches a critical decision point defined by volume. And you can take a look with fresh eyes. It saves screen time and mental energy.
Let's dive deeper now into interpreting these shapes and levels.
Yeah.
This is really reading those footprints, right? Understanding this.
Actual, we know it's magnetic. But also watch how the P draws sequential profiles over time. POC keeps mirroring an uptrend, converting low as significant and flows on that can be a bears of taking control at that crucial step.
What value of VAH VL?
Right, so as their price range for that period. And value H or below and stays out, that's a strong indication the market is rejecting the old value and seeking new.
So breakouts from the VA are
very. And within the VA, or when price returns, acts as initial resistance support. But, and this is key, just look for don't only buy the price action extended.
Now the
areas of past price often gets choppy or consolidated with a intraday. Here's a practical tip. If you're trading a breakout away from an HVN, try to avoid placing your entry right into the next HVN. So there, first.
Less HVN.
Exactly. See how it reads before.
And the LVNs, low volume nodes, the thin spots.
The vacuums. Remember, price hates a vacuum. It tends to slice through LVNs quickly because there's simply no significant volume.
Maybe, or breakout entries.
Excellent for breakouts, target zones beyond them. But crucially, they are terrible places for us. Price likely
let's adapt it.
I like them.
The POC is busiest all everyone gathers.
The main
areas the market high volume are like popular side stalls or cafes where people consistently and the low volume dark ways avoid them or just hurry through them.
Around there either. It's transitional space.
That really helps visualize the concepts. Can we maybe run through a quick scenario putting these interactions together?
Sure. Let's take USDJPY again. Imagine you draw an FRVP over the last 3 days of trading. Let's say the POC is at 157.80, 88.20, VAL is 157.0, and a clear LV is at 157. This is trading near 157.30.
Okay, so it's in that LVN, just below the value area.
Might happen. And below VAL is if buyers step in here and price exactly, it's reclaimed the previous value area after testing below it and finding no sellers in that LVN. That could be high probability long entry. Your logical target at point, maybe the HVN cluster or the 58.2A. You're using the volume structure to map out the likely path of least resistance and potential stopping points.
That's moving to price to actually anticipating based on market structure defined by volume.
That's the essence of it. Predictive analysis based on where the market has shown its hand, not just reacting.
Are there common ways traders misinterpret these concepts they are used in thinking, okay, guaranteed reversal?
That's a classic one. The POC is a point of high volume, yes, but it can absolutely be a point of continuation if it breaks through it, finds it's not an automatic wall.
What else?
An HVN in the middle of more different than an HVN of trend and LVNs. Thinking they're safe zones or support resistance, they're not. They are zones of imbalance and potential high velocity. Treat them with respect.
So for someone listening who's excited to master this, what are your top tips for practice? How do they get good at reading this diary?
Practice. Seriously. Manual VAH, VA, use them of this. Go to RVP and those to reads. Exactly. And journal. When price hits an LVN, what happens? That's the POC. What happens? Consciously in analyzing the
advice. So let's wrap this deep dive up. See volume profile declaration. Diary by statement has occurred. Understanding POC, VAH, VAL, empowers the pros.
It really does. And I think the final piece is traders aren't just clicking buttons based on signals. They strive to understand why. Why does price stop here? Why does it exit there? With FRVP, move beyond uncover deeper intentional
perspective. So challenge listening is to take these tools diary, they're actually transform into profit on your own. This is where we cut to the insights. We're tackling really persistent and where money is flowing, of where the big players are placing their bets. The fixed volume profile, we call it P, is about finding some magic signal. It's about gaining a real competitive edge. It's about helping you shift your trading from, let's say, random guesswork, truly.
That's exactly it. It is massive. The world's most liquid market. We're talking over 6